Testing 1 2 1 2. Two seconds. Hey, hello. Is that better? Well, some strange things happening this morning. Hello, good morning, folks. Let's see. Hello. Yeah. Okay. We're on. Sorry. Can you hear me? Might be on mute. Yeah, I think I am. All right. Okay. Perfect. Thanks, team. Anyway, you get organised. You do it all and then one little thing. Anyway, hopefully you're all well, team. Welcome to another Wealth Coffee Chat. Good to see you here this morning. Got a few people in the house. Chris, David, Luke, Kevin. Awesome to have you on this morning, folks. I'll do the little warm-ups anyway while things are happening. Jason Witten's my name. If you didn't already know, most of you do, so that's fine. Today we're going to be having a little yarn. We usually do this each weekday, folks. Wealth Coffee Chats, that's what it's called. 8:10. Trying to get to the bottom of what's going on out there in the good old world of property investing. So welcome along. Good to have you here with me today. And if you're new, say a bit of a hello in the chat. James is there. Happy Friday for sure, everyone. Paul, all the way in from Toowoomba. Good to see you, mate. Thanks for joining this morning. Excellent to have you here. Well, I thought I'd do part 2 of our conversation from yesterday. I thought I was going to fit it all in one day, but sometimes I get rabbiting on and I don't. So lucky we have a couple of days in a row of these conversations. Irene, good morning to you. Great. Thank you for joining us. Good to have you here. Hey, part 2 of how do I increase my cash flow right at the moment. We've got some high interest rates or higher, let's say, than we've had in the recent past, like in the last couple of years. Just so you know, folks, I think I did this the other day where I was doing a presentation. I went back to my slides that I did in 2019, and I had at that point in time record interest rate lows of 5%. Record interest rate lows of 5% in 2019. The lowest we'd had in, I think, 20 years or something like that, or whatever it was. Anyway, it was pretty interesting. Sharon, good morning to you. How you doing? Good to see you. Hey, listen, this morning I thought we'd talk about the idea of increasing cash flow, either on a property that you have or potentially on a property that is coming. And there's a few different ways to do that. How do I increase my cash flow? How do I increase my income on the real estate that I own? And what are the pitfalls? What are the pros and cons? Some things to look out for, et cetera, et cetera, et cetera. So let's dive into it this morning and see what that might look like. So the idea that we either have a property or we are looking to have a property that we rent out. The rent from a regular residential piece of real estate. There's kind of 4 ways we can create income from a normal. Let's just call it normal, regular residential piece of real estate, right? Right. So there's 4 ways. There's 4 basic ways right now available to pretty well everyone in the market how we can rent our properties out. So let's have a bit of a look at this. Number 1 way, folks, is your normal residential rental, right? So and what's that called? Put it in the chat if you want to. There's 4 ways, or there's 4 styles of renting a regular piece of real estate. One is called LTR, which stands for long-term rental. Now, folks, put it in the chat. Pretty well everywhere. I think every state of Australia now, if you are renting your property under a long-term rental agreement, tell me what is the time frame of that rental agreement at the moment, folks? What's the time frame in months? Minimum time frame and the minimum time frame of the ability to increase your rent, folks. Minimum time frame. Tell me in the chat right now what that is. We've got a couple of people here. Morning, Nicole. Yep, it's 12 months. It's pretty well 12 months everywhere. So you can't put your rent up in under 12 months. It was 6 months in Queensland, but now it's sort of a 12-month. It's a 12-month agreement. You can have shorter agreements, but you can't put your rent up. It's weird anyway. But anyway, let's just not get confused. 12 months, okay? And normally that ranges anywhere from sort of, in the right places, 4 to 5% income, okay? Now, number two, a different way of renting an existing piece of real estate, and it's still in this long-term rental, right? Long-term rental. What do you think, folks? It's still long-term rental. How could you increase your income? Quite simply, quite easily, when it comes to a residential piece of real estate, this is still long-term rental, but you fully or maybe even partially furnish the property. Exactly, Chris. Boom, onto it. Furnish the property, folks. Furnish. Furniture. Now, I'm a big fan of furnishing a property because, there's depreciation and also you can bump your rental income. Now, quite in some excellent properties, you can bump the rental return, a good percent. And the after-tax return, if you've got furniture in there, can be quite good as well. So fully furnished, still 12-month long leases for rental. But the return, certainly I've seen fully furnished returns sit in that sort of 5 to 6% range. Okay. Which is awesome. Up there, if you've got a 5.5 interest only loan, like which I've got on many of my properties right now, then that's not bad. You can't complain about that. If you're getting a 6% fully furnished, some depreciation, some add backs, you might be positive cash flow after tax. No problem. It's taken care of itself. Happy days. All right, let's talk about number 3 and number 4, like four ways a regular piece of real estate can be let out. So this is kind of normal income over here, right? So we've got, just our regular normal income in this sort of section. And now we're sort of increasing our income over here. This one's getting more. And now what can we do with number 3? Well, this one, my son's actually going to do. He's got his deposit down on his first house, a nice 4-bedroom place just up the road. He's got all the grants and bits and pieces, which is excellent. So, what is he doing? What can he do to beef the rent up when he lives there? It's part of his live strategy, but there's another way you can take regular residential real estate and rent it out. Tell me, folks, we've got something regular long-term rented. We've got something fully furnished. Again, regular long-term rented. There's a third way. There's actually 2 ways, but the next way is rent the what's out. Rent by, the short-term rental is over there. Rent by room. Rent by room, folks. Rent by room. So rent by room, how does that work? Right. So let me show you a little thing that my son, Callum, he's got a 4-bedroom house that he's buying in a suburb just up the road from here called Coomera. All right. So let's have a quick look at what that might do. Right. So, rent by room. That's it. Luke, rent by room. Now, there are specialist agents who do rent by room. Some normal agencies will rent by room. Sometimes it's a bit hard for them to kind of get their heads around that. But sometimes in the right position, in the right place, this rent by room strategy can be very, very good for your income. Excuse the croakiness. All right, let's have a look at this rent by room. So just up the road from where Callum is buying, these are on flatmates.com. If you go and have a look around, you go to flatmates.com, anywhere in Australia, there are these listings that can show you, would it be worth it to rent a room out? So you're like $280 a week and 300 a week. All right. So let's just do that. So Callum has 4 rooms in his property. So Callum's got 4 rooms in his property. So the rent by room strategy, let's have a quick look. He's got 4 rooms in his house, 4 rooms. And this is actually quite a good strategy for the young people, let's say first home buyers and stuff like this. I know a lot of young people who are happy to share and that sort of jazz. He's got 4 rooms. He's going to live in one, and he's going to rent out 3 rooms while he lives there. So if he rented out 3 rooms while he lived there, folks, and let's even say it was $250, right? He would get $750 a week. $750 a week for his property. He's paid $609,000 for his house. Who likes the idea of that? Who likes the idea of renting out that property, for $250 a week? Now, if he rented all 4 rooms, that would be $1,000 a week. When normally, at the moment, the quote is $650, not 650K, but $650 a week. $650 a week for regular long-term rental, folks. One of the things that, and we'll talk about this in a minute, but this is fantastic. And he's committed to this one, so he's going to live there. He's going to rent 3 rooms out to his mates for $250 a pop. He's actually going to make money. He's going to make money. So the government's given him the $15,000 grant. He's got the stamp duty concession. He's got all sorts of things. And so he's going to make money while he lives in his first home. He's going to rent it out to his mates. Anyway, there you go. Not a bad idea. Not a bad idea. So that's pretty cool way to go, And if you think about it, $250 to $350 looks like the going rate in and around that area, right? $250 to $350. Looks like if you furnish it, then it might be a bit more. So he's pretty happy. He's pretty stoked about that. And that's one way to make it work, right, folks? Okay, so the fourth and the last one is the short-term rental. So short let rentals, okay? Commonly, people sort of call it, Airbnb, holiday rental, et cetera, and that certainly can be fantastic, folks, when it comes to the returns you can get on these things for sure. What are some of the pros and cons of this one, right? We think about, your normal regular stuff over here. You've got to, get your insurances and make sure you've got a normal residential lease and all that sort of stuff. Now, some of the things over this side on these 3, what are the pros and cons there, folks? Let's just chuck it here. Pros and cons. Well, the pros is you can increase your income. That's the pro of this thing. Like if you treat that property a little differently in how you rent it out, well, you can beef your income up quite nicely. And, many of these returns can be pretty significant. Rent by room, you can go, 6 to 8%. I've seen that work. And over here, you're talking, and this is gross, and this is where you go, 6 to 10% sometimes in this Airbnb short-term letting. What are the downsides? What are the things to be aware of? Well, you have to have a specialist agent. Number one, a specialist agent who specializes in this sort of stuff. Number two, the costs are higher, okay? The rental costs, the agency costs, you might pay, 6, 7, 8% to rent a regular long-term rental out. Well, the costs for rent by room, not necessarily fully furnished, but rent by room and Airbnb strategies, they cost more. Often some of the letting fees, especially in Airbnb or short-term letting, can be up to 20%. Now, you're turning over things and whatever, so when you do the costs, it might work out quite nicely. Understand that. Number three, insurance is more expensive. And number four, wear and tear. Wear and tear on your real estate could be a bit higher. Okay, so maintenance might be a bit higher as you go along. But again, this is the sort of, you balance it up in the first, let's say 5 to 10 years of a piece of real estate, especially if it's new. That's not too bad. You get depreciation anyway. Okay. So there's some pros and some cons. And if you want to do it, make sure you talk to some people who specialize in this. And if you're in our coaching and mentoring program, chat to your coaches. Many of our coaches are doing short-term letting themselves anyway. So it works a treat. But let's have a look at this. This is how it looks in the world of Airbnb, forecasting or revenue, right? You have a look at comparison of long-term rental. And what you're trying to do in the short-term letting is you're trying to, Airbnb, you're trying to get about a 65% occupancy rate, 65% occupancy to really make it work, okay? Because, the bookings can be sporadic, okay? But, occupancy means how many nights you've got booked in advance. And, there's a few things to look out for with this short-term letting. It's seasonal, okay? So, seasonal. So it peaks in certain times. Tell me, folks in the chat, when would be the, Chris, the capital gains tax exemption, certainly if it's your principal place of residence. It's an interesting thing. If you're not claiming the interest on your property and all of the expenses with your renting rooms out, if you're not claiming, depreciation and expenses and all that sort of stuff in your PPR, then it won't mess with your capital gains tax exemption. Okay. So you just declare the income and you pay tax on it. Okay. It's kind of almost irrelevant how you earned it. Only if you're saying, oh, well, I've earned this income and now I deserve to offset the interest as a tax deduction and any of the costs and expenses and stuff like that. And if it's your principal place of residence, then it gets a bit messy. So chat to your accountant about that. Also, Chris, the 6-year capital gains tax, the 6-year capital gains tax exemption kicks in as well. So this is what happens when people claim or rent their houses out for 1 or 2 months a year Airbnb, and they move back into them at the moment. You can fully claim it for 2 months and then you move back in and the 6-year capital gains tax thing kicks off again. So yeah, anyway, great question, Chris. And the answer is chat to your accountant. If you plan in advance, it should not affect it if you understand what to do. Okay. Did that make sense? Hopefully it made sense, mate. But yeah, folks, you're trying to get sort of 65% or more. And you can see, this is one of the quotes that we got from our team doing the short-term rentals down in, where was this one? Where was this one? I think this was in Melbourne, this one. So you can see where the occupancy is higher, obviously in December and January, and there might be some, over here in April, there's some times where there's higher occupancy in your properties, and the pricing is higher, particularly in holiday times, folks. You know what I mean? So understand that one as you go along the way. So is it worth it? Yes, absolutely, it can be. Here's one our team just down in Melbourne. We manage a fair few short-term lets down there, and we just got a booking from the 15th here. If you look from the 15th all the way, I think it was a 170-day booking or something like that on Airbnb, on short-term letting, folks. This is certainly a way. I've seen a few people short-term let their properties, folks, and if they want to keep up with the going rate in the marketplace, where you could rent your you can have a minimum stay length on short-term letting. So some benefits here. So one, you can have a minimum stay, right? So you could price. Let's say you were concerned about the rents going up and you not being able to stay up to speed with your costs. Let's say the interest rates were going up and you were locked into something and you wanted to be able to have some flexibility. Well, I see a lot of investors putting their Airbnb properties up very competitively for pricing, and they're doing like 3-month stays. So they're turning their tenant over, or they're keeping the same tenant, but they can put the rents up as you go. Like, that's the sort of thing. Yeah, Luke, that is something that is going on in the marketplace, where the Airbnb world is at odds with the owner occupiers, people who live in those areas. So there's a fair bit of legislation and other things coming in, which it should do. Certainly it should be managed well and understood. And that's one of the cons of it, to be honest. The legislation isn't clear for short-term letting, especially Airbnb stuff, and it could, if you were relying on that income, it could be restricted or changed in the near future. So speak to your coach and your experts about it. We've got some good team that are managing that stuff. The ones that are pretty good are places that are quite holiday centric, or professional CBD centric as we go. So yeah, you're dead right, Luke. So it's interesting in that term. So we've got a couple of really awesome developers we work with over the year. One of them you guys would know, one of our favorite developers, Aria, and they're fantastic. They've got amazing buildings, and they've banned Airbnb in their buildings, right? So no short-term letting at all. And what we see is a bit of a trend. There are quite a lot of owner-occupier buildings that are saying no short-term letting, no holiday letting in our building. And then there are some buildings being built specifically for those who want to short-term let it and generate an extra income. So I think that's going to be part of the future. That's something you're certainly going to look out for when it comes to Airbnb letting, short-term let, holiday let, et cetera, et cetera. Some of the professional letting is quite good, people traveling for work and those sorts of things. But again, this is what happens, folks. Yeah, exactly. Yep, Luke. And And the Cav Corp is exactly the same. They won't allow short-term letting. It ruins their building. It ruins their brand. It annoys the tenants, et cetera, et cetera. And arguably in those buildings, certainly I know for both Cav Corp and Aria, they are getting premiums, like significant premiums in the long-term rental. That makes the, maybe the volatility or the effort to short-term let something unattractive. Do you know what I mean? Yeah, there you go. So hopefully that was useful this morning. There's a bunch of ways you can increase your income when it comes to residential real estate, and they don't all have to be just Airbnb. There's way more ways to do it, right? So you can fully furnish the property and rent it regularly. I quite like that one because it just bumps my income a bit, plus gets me some tax deductions. Rent by room, those things are quite good. But again, you have to find some specialists, or you might need to do it yourself. I don't suggest you do that sort of stuff yourself, because the legislation and issues could be, quite negative if something goes wrong. And short let, Airbnb, holiday letting, those sorts of things. Again, fantastic for income. You've got to make sure you find the right building in the right spot. But there you go. All right, folks, that's it. Done and dusted. Good to see you this morning. Thanks for joining me for another Wealth Coffee chat. I think, I've gone over again. Gee, tell you what, it gets a bit. I need to be more concise, don't I, in my chats. Anyway, I'm rabbiting on now. I should just finish as well. So thanks, folks. Good to see you. Hey, join us tonight. We'll have a Wealth, Wine and Wisdom with my compadre, Andy Fenton. Plenty going on out there. We'll do a bit of a deep dive on it. But thanks for joining us this morning. We'll see you guys next week in the world of Wealth Coffee Chats. Chris, have I ever gone under? Financial under, Chris? I got very close once back in the day in the GFC. I'll tell you a story one day if we get together with a glass of wine. Might curl your toes. There you go, man. All right, brother. Hope you're well. That's it from me, folks. You guys be good. Take care. Remember, this thing's a marathon, not a sprint. It takes time to build your property portfolio. Be patient. Make sure you buy well and don't sell. Have I ever gone under on top? No, I don't think I ever have, Chris. You might be right there. Maybe I'm just kidding myself. There you go. Anyway, there you go. We're all friends. We can share deeply here, can't we? That's what I'm talking about. Anyway, that's it. All right. Now I'm really rabbiting on. I better finish this. All right, folks. See ya. You guys be good. Enjoy the weekend. Bye-bye.